What's up, YouTube? Welcome back to the channel. Another episode of the Crypto Breakdown. I am your host, Ryan Matta. Coin of the day, Kadena. Can this coin 2x, 5x, maybe even 10x? But there's a little twist. I got Stephen Ward, the CEO of VY Finance. It's one of the #1 dexes, my personal favorite dex on Cardano. He used to be a hedge fund trader, and he's actually going to teach us how to set up charts, how to frame out different time frames, how to actually use Fibonacci's to trade different levels of support and resistance. And not just that, but how to trade different markets. So by different markets, I mean like KDA BTC versus KDA USDT. And I used to think I knew why Bitcoin would affect the entire market, but by the end of this video, it's going to blow your mind on I just won't overtalk it. You guys just got to make it to the end of the video. And if you do, and you guys can guess where the price of Kadena is going to be at on October 1st of 2023, drop some comments below. Whoever gets closest to the penny, I'm going to be doing a $100 Kadena giveaway on October 1st of 2023. So drop your comments below. Let me know where you think the price of Kadena is going to be. And while you're down there, click the link to VY Finance's Twitter, swing over there, show Steven some love, and let's dive deep. So tell me, I watch all these guys on YouTube and they chart and they do all this crazy stuff. And half the time I think they're full of crap until I just heard you pretty much break it down and it all made sense now. What are your thoughts on TA from what you see on YouTube versus what actually happens?
Yeah. Look, the biggest thing that I would say from TA on YouTube is it comes down on two angles. First of all is a lot of the TA people on YouTube are trying to work backwards from a hypothesis that they have, right? So rather than saying, let's look at the market and what's happening, a lot of them go, I think Bitcoin's going up. Let's find evidence that Bitcoin is going up. Now, if you want to cherry pick evidence, you can always cherry pick evidence because it's TA. It's an art. It's not maths. So you're always going to be able to find things that sort of suit what you want and say what you want so you can support your own argument. And a lot of those TAs that you see on YouTube lean towards the realm of hopium rather than leaning towards the realm of what's objectively happening, right? The other side is a lot of them are just doing very technical things. I used to love the technical things, but I lean away from them a lot more now because at the end of the day, trading is about a binary decision. Trading is about, do I buy or do I sell? If I'm trying to make a binary decision, adding more information doesn't necessarily assist with getting me to a 1 or a 0, right? And if I just think about this in terms of mathematics, right? And I will think of it just from pure machine engineering perspective. So similar to what you would have done, Ryan. Mm-hmm. Yeah. I got a robot that has to make a decision. That decision says turn left or turn right. And whether it's going to turn left or right is based on a multitude of variables. Let's say which way the wind is going, how fast I'm moving. Now, if I've got those two variables, it's going to be very easy for me to make my decision which way to turn left or right. I just do my summations, see whether it's closer to 1 or closer to 0, and then it's going to decide on which direction to move. Mm-hmm. If I start adding in 7,000 different variables that I have to look through before making the decision left or right, that's not necessarily going to lead me to making a better decision or making it in an efficient manner. I need to work out which variables are utile for the situation that I'm interested in, and then how do I use those variables to give me a yes or a no. When we've got these people doing hyper complex TA, I don't know what their system is for achieving a yes or a no, but unless they've clearly defined that system for you, a lot of what they say comes off as hocus pocus mumbo jumbo. Mm-hmm. Now, what I'm trying to do here is I'm showing you this stuff without giving you a system for a yes or a no. I'm just explaining to you how to look at the market to hopefully expand your view of what you're looking at. It's not just a chart, it's a pattern. It's a picture that's being painted every second of every day, right? And you're trying to read those brush strokes. I don't think that adding more and more and more and more information of the color is important when I'm trying to work out the direction of the brush stroke, not the color. Is I guess the best analogy I can use.
No, that's great, man. Yeah, I'm with you 100%. I
was talking with Ryan before. We want to build up a few actual real life trading scenarios based on what we were just talking about. And I do want to add, this is not, I am being shared. Yeah, perfect. This is not financial advice. Don't go off and trade based on this scenario that I'm building. I have been, and very often will be wrong. So just be aware of that fact. And by the way, any trader that tells you otherwise is lying to you.
We have Kadena on the chart right now, and you're going to show us how to basically build a full out trade strategy for Kadena, right?
Yeah, well, a trading scenario, I like to call them.
Okay, trading scenario.
So trading is built out of scenarios that you build from the market, and it's not a long-term trading strategy. It's just for a short to medium term. Would I rather be long or would I rather be short over a prospective time frame? And how do you build that opinion? Because there's a thought process to it. So here I'm pulling up the fib. I'm just going from the bottom of the range to the top of the range this year, just like I was doing before. We might be actually getting a little higher back here. We're at the top at the very beginning of the year, around here.
And why does it matter like January 1st instead of going back to the previous high right there, which might be in December of something?
Absolutely. This is an arbitrary point that I am creating, right?
One of your data points.
Yeah. So my thesis, and remember, it all works in theses. My thesis is, and I think it also looks fairly solid here, that here we were in euphoria. Here we had the drawback from euphoria. Here we had market speculation because we didn't know whether we were in a bull or a bear.
Yep.
And then market conditions changed. So this is my thesis, that within this last year, we've been working under different market conditions to this period of time.
Yep. Agree.
So the information drawn from the prices here are not as useful for me as the information drawn from prices here.
Well said, sir. Well said.
Now, when I am going to go a bit closer, I want to have a look at, because here we've got two clear ranges, right? We have a double touch here, a small attempts where we're trying up here, and then we sort of drop into this new range, which means this was the second motion that we saw, confirming the bear market, which makes me think that this is going to be a range that we're interested in. And this here, this point here is going to be a range that we're interested in. So I'm going to overlay those two as well. The magic of editing, it will be there. And I probably want to take it from, this seems to be where we're deteriorating from, and we seem to be holding from below there. So I'm going to go from that point. And again, remember, this is an art. So any point that I'm picking is everyone who does these will pick a different point. It's the one thing I've really learned with fibs is that everyone's got a different part that they go for and a different way that they do it. Kind of find, and no one will ever get the same point twice.
You got 3 different fib levels, and now on these, you're not always pulling to the same bottom, right? The bigger time frames, because you're going back farther, might have a different lower wick.
On these, I am actually pulling back to the same bottom, because this local bottom is the same as the max bottom of the range that I'm interested in. Go to Cardano, you will see that it's different to that. We'll have a different max bottom to local bottom, and we'll be taking it from a different point. But here we go. We've got our 3 charts overlaid on top of each other. And now let's zoom in so we can really have a look. And what we can already see is that these 2 bigger charts that we drew are actually having a fairly large impact on this local range. First of all, this local range is contained within those 2 larger ranges, right? And this is going back to the end of May. So since these 2 are localized within those larger ranges, we could say fairly confidently that there's a long way to go before we can punch back into this range above here. Right? So this sort of resistance zone is going to be very difficult to get to because we have to pass through this entire trading range to get there. Now, this trading range is a deterioration. I don't have good news on this one, I'm afraid.
No, I think we're going down. So go ahead, do it, trade it out, man. Tell us exactly how it is. That's why people can see what you're saying.
Yeah, look. So here we've got what we call a bear flag.
When it breaks, it's going to break down.
Yeah.
That's all right.
I mean, it can be a false flag. From my experience, bull flag and bear flags are false 20 to 30% of the time. So I don't normally bet on flag formations. So I wouldn't look at a flag formation and go, I'm going to sell Kadena, for example.
Yep.
I would say this is an indication to me saying that this is worth looking at for a sell rather than saying I'm going to sell. Does that make sense?
Yeah, 100%. Absolutely. Yeah.
Now,
and don't try to sugarcoat it, man. I want to see this from because it's gonna be nice to go back and look at this next week and see how things played out. So don't feel like you have to be bad if you're saying price is gonna go down. I don't give a shit.
Well, if we're looking at the next week I don't necessarily think we could just keep constricting in this small zone for the next week, even for the next 2 weeks, because it could go out a little. But in general, either we're going to see volume drop to very low, or we should have a move soon, is what I'm saying. I would say that this market is priming up for something to happen. When we're going to look at the risks, we're going to build upside and downside scenario risks, right? Now we're playing at the very bottom of this range, which means that here we've actually got zero information on what the levels are, right? So what are we going to do to try and get information on where the levels are in a market like this? We actually have to go back and look at previous price action and how it behaved if it existed in those levels before, because otherwise this is just no man's land.
Yep.
But we do have price information on how we behaved at those levels. Back here, look at that. So we're actually going to now go backwards to try and sneak forwards. This is a bit more of a complex analysis. I hope you don't mind.
No, I like it, man.
So let's take it from the bottom here. Here is where we had a clear breakout, and this information is completely useless for us, right? The only things we can really see is that we had a bottom around here that sort of bounced here before it broke. So let's go from this bounce before it breaks And rather than drawing fib levels on it that go all the way across, which now 4 fib lines get really confusing, let's take the fib levels that we're interested in and just draw them as lines across. And we'll change their color so we know what we're talking about. This one's a little bit high. But you know what? Again, as I said, I'm not going for pure accuracy here, guys. I'm going for how to build these things. So these are the 2 levels that we're interested in on the downside, I would say. We'll take the first 2 so we can build a trade thesis. And we'll just get all the price labels here. You taught me that. We'll get the price labels on these. Price label, price label. Now, I think we're pretty ready to start going. From a Kadena USDT perspective, I feel pretty comfortable in saying that we've got a lot more. Actually, I don't. So, if I was to go down, my first point of exit that I'd be thinking about is this point here, right? Where we've been bouncing off recently. The line seems to be a bit higher. So we could say that we're pretty confident that if we had a fade to this point here, we would expect to have a bounce back up. And we saw that happen right here just 4 days ago. We had a fade to this point and we bounced right back up.
Yep. Is that the $1.30 range?
Yes, that's the $1.30 range. That got to what? $1.31. Yeah, so the $1.30 range. So between these 2 levels here, and that's the level of the bottom of the flag and the top of the of the support in the past. See, this level here is the support in the past. The bottom of the flag and the top of the support in the past seem to be creating a defense range. So that's your range of support. My long thesis would be I would want to get long around 30, let's say 32. 132 is where I'd be looking to get long. Let's do green. Here's my green thesis. This is where I'm looking to get long. Where would I exit on the upside? So on the upside, the only information that I'm getting from here is 1.88. I don't really want to be going all the way to 1.88. That doesn't seem to me like it's going to be giving me a very high probability. Okay. Why? Because we haven't been there in a while, and I'm certain that this local range here, if we did a very small fib, you would see has got a bunch of levels to get through to be able to get there. Yep. So that's exactly what we're going to do. Overlay the next fib. Let's have a look at this range. In here, now it's getting, there we are. And this is where, by the way, you'd go down a time frame. I'm still doing it in dailies because I just want to keep it consistent for everyone so we're not also flipping time frames. Yep. But you would also go down to the hour or the 30 minutes to have a look at it closer in, right? So here we seem to be approaching the bottom here. Our sort of long zone is halfway between these levels. And if we're going on the upside, we can see that we've got a fairly few times we've bounced off this level, come back, bounced up, come back. So depending on how much you want to stretch yourself, you'd be looking at probably going between this level here, which is the 1.5 cents. And if you wanted to extend yourself, you'd go to maybe 0.55, 0.6, right? Catching half of this range. So let's call that what I'll call my safe buy scenario. And we'll do it to 5.5. 5.6, perfect. This is my safe buy scenario. I want to move from inside this line to inside this line. And by the way, this is where DCAing is really important, right? Like I see 2 levels here that I'm happy to buy between. So I'm going to start buying at the beginning of that level and then buy it all the way through down that level. Anyway, that's a strategy we'll talk about another day. So my sell scenario. Let's build my sell scenario. I want to get to this level or maybe this level on the extension. Now, if we're able to get back up to this line here, that's a fairly comfortable point selling. Why? Because you want to be selling from resistance. You don't want to be selling from support. That's another just basic rule of thumb in trading.
Never long into resistance.
That's it. So let's put our sale at 49 and let's put our rebuy at our first level of resistance from the past. This was the first level of support from the past. This was the first level of resistance from the past. Now, here is a little trade scenario for the local range. What's our risk reward? If we get to here, my risk reward is going to be 0.32 to 0.56. That's 0.24. So my reward is 0.24. My exit makes sense to exit where I would enter my short. So it's going to be 0.32, 0.27, that's 0.05. 0.05 divided by 0.27, 0.18. That's a very good alpha. I would feel fairly comfortable going long at this point with an exit here and try and ride it to 1.56. Maybe. Well, let's have a look at it against Bitcoin before we have that full discussion. This is just based on the one chart.
Yeah.
Then on my downside, I want to get short 1.49. I want to take it out at 1.27. My exit is at 1.56. The difference between 1.49 and 1.56 is 0.07. And my distance between these two is 0.22. 0.07 divided by 0.22 is 0.31. That's a higher number than this one.
Yep.
Which means that in this circumstance, I would be more comfortable going long here than if we reach this point to go short.
Got you. Heck yeah, homie.
What does that tell me? That tells me that the balance of probability at the moment is that as we start going down, we're more likely to see people buy up in this zone than we are to see people sell down in this zone. Because your balance of probability is to buy here, not to sell.
Is what you're saying. And the lower you get, the higher that probability goes to go long, right?
Yes, that's how it works in tandem with RSI.
RSI is the only indicator I use.
Yeah, that's a great indicator, right? So this strategy here that I'm describing works really well in tandem with RSI, because RSI will show you at a quick glance markets which will maybe be showing points of overbought or oversold. And those points of overbought or oversold are really good moments to start looking at have the probabilities shifted towards a certain direction, right? Okay, and then you can pull up a quick analysis like this. This took us 10 minutes, right? For a chart analysis, as far as the trading thesis goes, that's very quick, right? I may also make it look easy, just like quickly overlaying 4 charts and pulling out some things and doing some lines for fibs, sorry. But once you get some practice in it, happens very quickly, right?
Yeah. 100%.
So in this circumstance, in the local range, I would say that I'm not unconfident that this is going to go and bounce back. But what is that telling you? And this is where timeframes are really important, right? And also to keep into account macroeconomics. What this is telling you is actually not very utile, because what I've basically just done there is I've done the numbers to show to you that this support exists, right? Why does this support exist? Well, this support exists because the balance of probabilities every time we've reached it just swing far too much to the positive side that people start rebuying. And we've got a big swing here, a big swing there, a big swing there, and then multiple swings off of it as we've been touching that point. So if you had done the trade that I just outlined there in any other point that we reached, you would be in the money. You would have ridden it up, taken your money there, come back down, ridden this one up, you would have gotten to 0.56, taken it out, boom. You would have ridden this one up, taken it up to, I'm just doing this trade strategy, right? So with just this trade strategy, exit 0.56, lost some profit, but who cares? Made money. Do it again, 0.56, made money, right? Waiting for the setup to happen again, would have taken it, wouldn't have made it back to 0.56 yet. Now, what I'm saying is that we've tested this support line a lot. We've been bouncing off it for a while, and every time we bounce off it, we're not able to get higher. This is why we're going to move to KDA Bitcoin for a bit more information, right? Because whilst my probabilities are saying that I'm looking pretty good for a long here, we've bounced off this level so much that is this actually a strong support anymore? What KDA Bitcoin is going to be able to tell me is just like what we looked at before. Am I going to be able to see any possibility through KDA Bitcoin that this range becomes possible? Oh, and I can already say that, yes, it does.
Does the more times you bounce off support, does that normally weaken support? Is that what you're trying to say there? I'm not going to say
weaken support. What weaken support is having lower highs that follow each bounce.
I see what you're saying, yeah.
Because that means the market's trying to buy it up, but it can't. Really tried, but it still can't. They've got the sale pressure coming in at each of this level and this level and this level here that we don't have a fib for. Oh no, we do. That must be a level on either an even larger or a smaller time frame. And that's this point here where we seem to be having a lot of bouncing where my dotted arrows are. That could be a fib from the entire range, or that could even be a fib just if we take it from here to there. But I can assure you that at this point, I already have the fib that is. Look at that, it's on this little blue one. There it is. So yeah, it's a fib on the local range. And I reckon if I pull this up to here to make it even more local, we'll have it in pretty much the exact same place. Yeah, there we can see it really clearly. Okay, look at that, I already did that analysis. So what we're gonna see is what's the possibility based on this range, what's happening here, that we could be exploring this range down here. And let's pull up our fibs. And I'm just going to do a really simple bottom to bottom for the local range, highest point in the year. Highest point in the year looks like, no, I'm going to do this range here. This range is definitely going to be an important one. It's going to be my purple, just while I'm there. Let's do the highest point of, we don't even need to do a very deep analysis for this. Like I can just look at it at eye and already tell you what the thesis is. So I'll just run numbers over the top of the thesis. So this is our value right now. We'll call this by the way, in trading, you never say all the zeros. You just call it by whatever the last 3 decimals are. So this is 74, right? So we're currently trading at the 74, and it seems to be flipping around this level here, bouncing past. Now, what we've seen though recently, and not too long ago, this was just back in June, was that Bitcoin was actually much lower against Kadena. Kadena bought you 0.00005. Up here, we had one Kadena bought us 1,000. So we went from 500 to 1,000 just in the last few months. Now we're sitting at about 750, which is halfway. I'm not even going to do a deep analysis here. Just listen to the correlated markets reasoning, right? This is how correlated markets work. I know that Bitcoin Kadena or Kadena Bitcoin, this market impacts the price of this market, right? Because they move in step with one another. Because as this moves, that moves. We discussed that in the last videos. Anyway, here, I would say from a risk reward, and I'm not going to do them all, I'm not going to do a full one, but we've got a probability that we could fall lower, or we've got a probability that we could go higher. Let's call this a rough 50-50. It could be less, it could be a bit more, but I reckon this is going to fall around 50-50. If this goes higher, which means Kadena is buying more Bitcoin, that means that we're likely to see this go either stay the same or go up. If it's staying the same and Bitcoin goes down, this will go up. If it stays the same, if this is staying the same and Bitcoin goes down, then this will also go up because relative value here is going to be moving towards Kadena. But if this goes down, that means Kadena is going to be pushing down as we're buying less Bitcoin, which means if we're buying less Bitcoin, we're likely going to be buying less Tether as well. Now, we can conceivably see a drop here. If we just go to the bottom of this range, it's possible to get a drop of 25%, right? So a drop here in 25% would indicate a relative value against Bitcoin loss of 25%, which would have some kind of transfer effect on here. Now, let's say someone comes in tomorrow and sells Bitcoin Kadena down to this point here, just halfway, 0.65. We're going to see people arbitrage that, but that arbitrage could very well be below this line.
Yeah.
Because a 25% move here, depending on what the size of the liquidity on either sides are, if they've got roughly equal liquidity, a 25% move here would result in approximately a 25% move here. And that would take us well into this zone. So based on the Bitcoin Kadena chart, I can say fairly reasonably, just at a glance, that was me explaining it, but I knew it at a glance, that this zone here is in play for Kadena, right? So we can work out the probabilities as well on just a very simple set of probabilities, but we won't. There's no need to, because that doesn't really impact my trade thesis, but that just tells me that this zone here is in play for Kadena. This zone here is also in play for Kadena. But what I reckon you'll find is if you go back through this chart and the similar timeframes, you'll find that each bounce on this chart is correlated with whatever price at that time gave you this line on this chart. And you can see these bounces, and it's interesting because they bounce to different heights. 13th of June, we get a little bounce on Kadena Tether, but Kadena USD on Kadena BTC on 13th June, we get a big one. What does that mean? That means that Kadena didn't lose value, but Bitcoin did. So Bitcoin lost value on this day. Kadena didn't lose value on this day or gained a little bit of value on this day. But the point at which it bounced here was when the relative value was at the 54. The point at which it's bouncing now is when the relative value is at 75. Which direction has relative value moved? Well, relative value has moved in the direction of Bitcoin. So that means that you've now got value in this zone with respect to Kadena.
Can you show us on, I think it was like April to May, Bitcoin came down from 25,000 to 17,000. See if you can look and see May 14th on the edge of your chart there.
Yep.
Bitcoin came down from 25 to 17,000, and Kadena double bounced at $1.35. So Bitcoin lost $7,000 in value when it bottomed out, and Kadena stayed at the same.
There it is.
Can you explain?
And I didn't even know that. I didn't even know. Well, I mean, I worked it out, right? But as I said, when I looked at this up here, as I said to you, this had nothing to do with Kadena gaining value. This was all Bitcoin losing value and Kadena staying the same. And that's exactly what you see when you look at the chart. Bitcoin lost value.
Oh, damn. You knew that right there. Holy shit.
Knew that right there.
How did you know that? Can you explain that to me? How did you know that from looking at that chart? I'm missing something here.
The way that I knew it just by looking at that chart is because if we look at the Kadena Tether chart on the 13th of June, 14th of June, this one moved very little. Let's say we moved up. This moved up like 20%, right, over those 3 days. So that means Kadena gained value in USD. This one moved up 50, almost 50%, right?
Yeah, because Bitcoin
60%.
was losing value.
Bitcoin was losing value.
Wow, that's so crazy to see that.
Right? So what we're seeing right now is that at this point when Bitcoin lost value, Kadena maintained value. Kadena actually hasn't lost that value that it maintained.
Got you.
Right?
Yep,
Do you see that? Kadena
Mhm.
still has the same value relative to Bitcoin that it gained. So that means whilst on the Kadena USD chart, we may be pretty even from this point, if not a little bit down. On the Bitcoin Kadena chart, well, we're also just a little bit down, but we haven't come back to where we tested relative value before. This is still open to another test on the downside, right? You can trade these charts like normal charts as well, by the way, I should add.
Yep.
So that means that I could expect conceivably, we could expect a movement up to here, don't get me wrong, but we could also conceivably expect a movement down to here to test this relative value zone as well.
Yep.
Right? And if we get a test in this zone down here, we're going to start engaging with this yellow box on the Kadena USD chart. Now, if we did that exact same test over here, what happened? Our relative value moved, which meant that our probabilities at this point were almost impossible to reach the box down here. And let me just show you to it. We can see it on the chart. So let's draw up the same box and have a look at why we weren't going to hit that box in the past. Because this was all because of Bitcoin that move happened. So this zone here, my thesis was incredibly unlikely at the point in time. Well, not incredibly unlikely, sorry. It was a lot less likely here than it was here. The reason being is that here we did a double test Kadena BTC. We tested this low, then we retested this low. This chart trades like a normal chart. Traders that are seeing this chart think this looks like a double bottom. That's maybe a simplistic explanation. But when you see that this looks like a double bottom, and then you see that Bitcoin is going down, what are traders that are panicking, that are keeping their money in crypto doing? Well, they're looking for markets that look good in the crypto markets they can move their Bitcoin to so they can gain some value. In the circumstance that we hit this point here in the Kadena BTC chart, this looked like very good value when Bitcoin went down to buy Kadena. So Bitcoin's going down from this point. Kadena looks strong because it's got strong support here, and I'm going to assume that it also had strong support back from the past, which isn't running now.
Didn't have a pair back then.
Yeah, that's fair. So traders took advantage of the double bounce and Bitcoin's reduced, or Bitcoin going down, to purchase up Kadena. Now that we get, so what does that mean? Sorry, that means that the probability of Kadena getting sold down to this point down here and holding based on this chart, given Bitcoin's price action, I'm not going to say it was unlikely. It was still likely, but it gave Kadena the chance to look good for a trade against Bitcoin, which it did, and that trade happened. So because that trade happened, we were able to maintain and bounce here. The problem that we have in this point now in Kadena is that we don't actually see the same setup. You don't have a good setup if Bitcoin drops. So if we see Bitcoin drop now, there isn't anywhere near as strong a setup to support this Kadena price on a downwards trade. So I could expect that Bitcoin goes down in value, and if Bitcoin goes down, we could at the same time see a red line here. And if we at the same time see a red line here, as Bitcoin is also going down in value, we're going to see an absolutely massive red one here.
100%. I see it.
Whilst the probabilities, and this is really important, and this is why I probably wouldn't trade this market. Sorry for the harsh honesty. Whilst the probabilities are in the direction of holding the support, the probabilities most of the time will be in the direction of holding the support. That's why it's a support. When it stops, when the probabilities shift from holding support, you'll find that the market shifts and you leave that support. But macroscopically, when looking at its relationship with Bitcoin, I wouldn't say that its relationship with Bitcoin is giving any support to this level. Is giving any support to this level. Things that happen in Bitcoin right now could negatively impact your long. Which swings me more towards the favor of not wanting to engage. Because it could be up, sure, but right now it could also be down. I don't know.
And it's all about probability, right?
Exactly.
It's trying to give yourself the best odds, and if the odds aren't even close, you just wait, because if the market's going to turn around, eventually they're going to be in your favor, right? Or
that's it. Or you wait for the probabilities to shift in a direction that you can now see an advantage. And that's the big thing. Most people are pressing buttons and not thinking about this. Your job in the market is to find a statistical edge, right? You're never going to be able to be right 100% of the time. When I look at this trade right now, I don't see any statistical edge in either direction. I don't see up being more likely or down being more likely. I see Bitcoin could screw us, or we might be able to go up if Bitcoin doesn't screw us. But at the end of the day, I'm effectively just trading Bitcoin right now.
Now, what if Bitcoin, can you use this same strategy to say, okay, if Bitcoin does screw us and comes down to this range, we would be looking for some really good long setups, like the Holy Grail long setups? If
that would be, I wouldn't want to be doing, that's not my trading style, right? So I wouldn't be able to give you much information on that. What I can say for you, what we could build is we can build a scenario very firmly to say, if I was going to be going short and trying to get this breakout on Bitcoin, where would I be aiming my shorts to be, right? And then what you would do is you would reverse that logic to say, well, if I'm aiming to exit my short on a long trade to here, my short on a big short to, let's say, 88 cents, and that's where I feel like exiting, that's probably where you feel like entering on the long side. That's how you try and project forwards.
Got you. So you never want to assume that conditions are going to be a certain way when price gets to a certain level. You always want to reanalyze the whole chart out.
Yeah, that's it. So when we get, let's say, and I don't want to say when we will, if we get to, let's say, 90 cents, and that was your trading thesis for your long short, right? And you made it and you hit it. And you're thinking, well, this looks like a good point to go long. Rather than saying now that will be a good point to go long there, your best bet would be to look at the probabilities at that point to see if it's a good point to go long. Gotcha. And then if it looks like it's a good point to go long, then ease in. But I don't want to guess on market conditions in the future.
Absolutely, man. That's perfect explanation, man. I love that. That's sweet, dude.
So we can actually do that, right? Let's just have a quick idea. Let's say we're able to retest the very bottom of this range here, where Kadena is worth 500. We're going down to on Kadena BTC, because this is not BTC KDA, this is KDA BTC. I need to do it in reverse. I'm used to BTC being the front quoted, not the back quoted. 500 sats for KDA, and then we need to look at what 500 sats would be worth. So we need to go here. Perfect. So, okay, so if Bitcoin, I need to do an analysis on Bitcoin to do this really firmly, right? But let's say Bitcoin were to drop 10%. Right? This is how we'd build our scenario. We're going to go back and test the 1700. That's a little more than 10%, 12%. Now, if we were to go down 12%, this is my downside scenario, I would expect to see a relative motion, assuming Kadena doesn't move at all, here of 12% up, because Kadena stays the same, Bitcoin's going down. So this would move 12% up if Bitcoin moved 12% down and Kadena had zero move.
Wow,
right?
That's crazy. Yeah.
Now, my assumption there, though, is that Kadena has zero move. So let's say Bitcoin drops 15%, boom, or drop that 12%, and Kadena follows Bitcoin and drops 12% with Kadena, and drops 12% alongside Bitcoin, boom. So now we've gone down here. If we go down to here on the Kadena chart, but they've moved in lockstep, what happens to this chart? It stays exactly where it is, because they've moved exactly in lockstep with each other.
Yeah.
That means that right now we can move into this zone and this chart stays exactly where it is.
Holy shit, dude.
That's dangerous.
Damn. Because
Bitcoin is the prime mover of these markets. So that's a precarious spot. Another reason why I wouldn't want to be going long here. Long or short there. This is a market that at the moment I wouldn't be trying to find any statistical advantage, because I don't think there are any.
Dude, that's freaking crazy, man.
Thanks.
Dude, that's so good. So are we done with the KDA one now?
Yep, done with KDA. That's my analysis for KDA.
So give me a recap of exactly what that was there. So just like, because I don't have you on the charts, but just your face. So
the analysis of that, the breakdown of that in simple terms is that at the moment, we're playing on a support level with KDA, right? Yep. In the past, when we were bouncing off this support level, the movements in the Bitcoin KDA chart supported the KDA chart. In other words, there were trades that existed through KDA Bitcoin market that gave us an opportunity to arbitrage against KDA Bitcoin to give us the capacity to bounce and maintain that support. That trading opportunity to maintain that support no longer exists through KDA Bitcoin. It's deteriorated. And that's why when you look at the KDA USDT, you'll see a deterioration whilst that is also deteriorating in the KDA Bitcoin chart. So that means that yellow zone below our support line, the bottom of our support line that we drew, is currently in play for the KDA USDT market.
Yep.
Whereas before it wasn't as in play, which means probabilities are shifting towards the downside. So whilst a flat risk reward analysis might tell you it's not a bad move to just go long when we get down to that support level, a deeper analysis into the relative value of the market will show you that it's becoming more and more dangerous to enter that position.
Dude, thank you, man. That was that was probably one of the best TAs that I definitely learned more in this TA. And just for anybody that's watching this video, we're going to be doing another one on Cardano right after this. So if you guys want to kind of relearn and let it all sink in, we're going to walk through that same scenario right now with Cardano. So I appreciate you. Thank you so much for coming on the show, man. And can't wait to see you in the next video, man.
No, thank you so much.